Problem is, most people try to anticipate, jump in front. Yeah, you're going to be right most of the time, but do you make it through the circuit to circuit to circuit? Or what happens if it does do another circuit? Are you prepared for that? What's happening, guys? I hope everybody had a fantastic weekend. We have another Sunday video coming at you for the 16th of October and the week ahead. Maybe the wildest week of the year so far for small caps. I think that it's definitely been growing, and there's been definitely some insane moves, but I don't think we've seen anything as insane as TPST. 20 cents to 11.50 basically. And just an insane trap right off the open, and once it started to break over that 120 level, I mean, shorts were just trapped from that point forward. And the good part about that one is the only way that you really got hammered is if you just broke every rule in the book and you stayed stubborn and you kept on either adding or you just didn't stop out. So, as much as, that one was a crazy one and probably did break a lot of accounts, I would actually be willing to bet that the following day people lost more on stuff like OPGN or VS or even something like SECO, where it just went circuit to circuit to circuit, and there was just no opportunity to get out for a lot of people. So for me, something like OPGN, you saw, where I entered, and even at that entry, it still wasn't a super sizable entry, just because I don't want to go to 4 or 5 or 6 on size and have that headache. So I did take a little bit less size, but then there was a scaling opportunity once it did flush and confirm that, yeah, we're not just going to go right back up into a circuit halt. And that to me was more important to see than to sort of anticipate that or expect that to happen, because as you saw, most people that expected things to happen ended up in going basically circuit to circuit, which doesn't matter what your risk is, it's irrelevant at that point. And then it's just about how far do you want to let this thing go against you, since the risk is out of whack at that point. So t-shirts for this week, I posted them on the blog post, so you guys can go in there. 2 for YouTube, 1 for Twitter, and you can see the winners there. And Traders for Cause is coming up really quick. It's less than a month away now. This is our biggest event yet. So again, we sold out real quick, and as I said a couple videos ago, there was a couple tickets that were left and then sold. And again, it's going to be probably 300 some odd people there, which is fantastic. So usually we're in the mid 2s or so, and then Zach's got a surprise for, I think he's going to announce it this week. I don't think he announced it yet, but if he did, then my bad. But either way, there is going to be a special event. I think it's Saturday night, if I remember correctly. And then, you can go out and enjoy Vegas or whatever it is you want to do. But it's going to be a pretty neat one. So I think this week a good way to kind of think about this is sort of like a sports analogy, and like trading in general. And, we're essentially training and testing out our systems, basically throughout the season, throughout the year. And, we're kind of studying up for the big game. And just like, professionals watch, tape, you're watching, actual tape, time and sales and things like that, where you're practicing your risk management, your execution, everything that goes along with trading, inclusive of, those cycles where, you have certain sports teams that are gaining momentum, and starting to really get super confident, and it just has everything going for them. And that's kind of when those cycles start. And that's the big game for us. That's when we need to be prepared and be able to take advantage of that opportunity. And for 2020 and 2021, those were my best years ever for, just like most people, I would imagine. But, at the same time, I was kind of held back a little bit just because maybe kind of knew too much. Like, this doesn't make sense. Why does it keep on going? And you don't trust that market, and you just got to kind of go with that cycle. And that was really the first cycle that I think I probably had the hardest time just going with the flow. right? Because it just didn't, it made no sense. And it was all supply and demand. And, you know, for those that did run with the ball and just kept on going, I mean, they literally made hundreds of millions of dollars. Many of my friends have. And that was the time to do it. But for me, it was like, you know, I'd lose, and then make, you know, a huge trade. Lose, make a huge trade. And so it was always kind of minimized, just like AMC on the ride up, you know, losing a couple times before getting, you know, one of the probably top 10 trades of my life. But that is just kind of being aware and understanding when those cycles come and go. And I just wasn't ready for that. But for this cycle, the point that I'm making is that, you know, just like you saw last Sunday video, we talked about, hey, I think that we're close to, you know, shorts are getting ultra confident, they're getting complacent, and I feel like outlier moves are right around the corner. And literally 2 days later, we had PRZO, which kind of gave shorts a little bit of, you know, a run for their money, but still let them out. It still gave them that ability to, you know, yeah, it almost squeezed them out and almost probably broke their accounts, but then they like got let out, right? So that trained again, giving that kind of reckless, the reward for being reckless. They got out alive, and then came TPST. Well, you know what? PRZO worked. I'm just gonna let this thing kind of, you know, do its thing, and hopefully it comes back too. And then it doesn't, right? And then you had OPGN, you had SECO, you had all these names that, you know, people were swinging. You know, OPGN, for example, had an offering, and then they did the offering withdrawal, registration withdrawal, which is the form RW. And then that is what originally had spiked it. So you probably had a lot of traders that were, number one, short for that potential offering, but then number two, also repositioning short because, you know, one of the games that they typically play is pull the offering and then do another offering at some point in the near future. So anybody that was playing that game got absolutely demolished when the stock went from 20, 30 cents, or I think that was 30, 40 cents to $4, you know, three high threes or four or whatever it was. So really nuts, and just one of those where I'm just happy to not be swinging size overnight. It's just not for me. And look, it's good for a lot of people, but the last week is kind of where that evening out comes, right? You just bank, and you just gave it all the way back. Or do you rather just a little steady kind of grind higher? It's up to you. Everybody's personality is different. When you're 20 years old, it's different than when you're 30. It's different than when you're 40 or 50, and so on and so forth. It just depends on what you want out of this. And, you know, that is something that you should probably look into, reflect, and just make sure that you're not just chasing your entire life. There's nothing wrong with that, but just make sure that that's for you. So anyway, likewise, the same warning that I had said about the, you know, shorts getting complacent and probably too aggressive too soon. I gave that same warning on the long side. And then you saw, you know, VS, SECO, OPGN, you name it. I mean, it just BPTH or BLPH, whatever that one was. You saw them all unwind and literally, you know, going from $3 back to 50 cents or 60 cents or 70 cents. So again, just sign of the time. So this week you need to be super cautious of the chop. The liquidity likely is going to be way less than what it was the prior 2 weeks. There's still going to be great opportunities. I think, you know, PRZO can continue to squeeze. And one thing I want to talk about with that PRZO is just kind of going through how that panned out. And if you look at the daily chart, we had that huge move, and I was thinking that we were going to start to have buy-ins on Wednesday or Thursday. And the reason for that is just the amount of volume traded versus the float. And if the trend holds and it starts to break over the key levels, which we knew, 220, 240s, once that 240s firms up, ramps through, comes back, consolidates over that level, you have to have an imagination. And there's just too much volume, held too well, too many shorts involved for it not to have that big move. So as we talked about, 330s was a really big level from the prior move, and then we ended up closing right around there and pushed out towards that level or above it after hours. So, you know, again, like I said in the last Sunday video, 5 to 7 does not surprise me on something like this. And we'll see what happens, and we'll see how it goes. But at this point, I feel like there's just as many shorts as there was, but with a lot less liquidity. So what happens is the moves start to open up more and more and more. That said, if you're buying a breakout, terrible way to trade these names, in my opinion. In my eyes, weakness, flushes along a trend is the only edge in something like this. And that's what I said exactly on Friday for anybody that was trading it long. You know, if you're buying that breakout, there's a good chance you just get flushed out. And if you go back and look at, you know, some of the daily action, every single time it ramped up, it actually flushed out. And if you notice, each time it flushed, it caught a little bit higher, a little bit higher, a little bit higher. And including the breakout there into maybe 1:30 p.m., if you look at that, it actually went up to about almost 3 and then flushed all the way back down to the 250 level or so. So if you're chasing for that 3 breakout, you're immediately faced with a 50% or a 50-cent retracement. So again, edge equals flushes. And so the same deal, I would be looking at, you know, basically on Monday, I would love for it to kind of pull back towards the 280 to 290 level and then start to rally back from there. So the thing about these types of trades, just like the day that it squeezed and it ran over to 3, they set that trap in the morning down to the 190s, right? So it was strong, and then it looked weak, let shorts win, get them really, really comfortable, and then launch it the other way. So in my eyes, you want to see a weak open, or if it has a gap, you want to let it flush and at least trap again. So this is going to be one of those where it's still good to have an imagination. And likewise, we talked about sector moves and things like that. So you had HUBC, you had MOB, and those are all starting to also come back with the trade, which is, if you guys watched the interview with Chris, he was talking about that exact kind of concept, where I call it sectors and themes, and I think, let's see what he calls it, anchored speculation, right? So just the kind of idea is like that one ship goes and it just pulls, the anchor just pulls all the rest with it. And that's exactly what we had on HUBC on Friday. So if you are familiar with why HUBC ran the first time and then the parent name starts to go again, then obviously you have an edge for that long side trade. So so that's that. This week in general, you know, we talked about MNTS on last video, and we talked about that liquidity trap. You can see the volume here on the daily, which was October 2nd. And then the trend just never really, you know, broke down, but it didn't have the volume associated, right? So, for example, we had 60 million shares, then it goes to 2 million, 1 million, and then it's got less than 1 million shares before it starts to reverse. So the way in which the volume goes down associated to the first day diminishes so quickly, but the price comes back. As soon as it breaks over that prior level, squeeze was on. And that's exactly what we had with that opportunity with the round trip almost on Thursday. So we had a nice steady move, squeeze out, and then you saw the short that I made on that trade, and then it flushed out really, really nicely. And then same deal we had on ACXP, same exact concept. EDSA, same exact concept. And then again, we had it on TANH on Friday. And so TANH was a nice long on Friday, followed by the short potential once 260s was, you know, pretty heavy. So again, you had kind of this trapping formation, but it held a you know, a base basically right over here. Then you had another round of trapping formation. It held a higher base, and then we went again. And, you know, you'll notice that's day 3, 4, and that's when, just like PRZO, you start to get those buy-ins. And so, you know, similarly with PRZO, the thing about this one is, you know, come Thursday, when that buy-in starts to happen, you know, it went down so far, but then it starts to come back up. So new shorts are interested, but then you're also faced with these buy-ins. So it starts to fuel the trend higher, and you just have a new round of shorts that are now in the trade, in my opinion. So that's why, you know, I kind of was bullish on Friday for this potential squeeze out. So we'll see what happens, but what you are seeing is a lot of round trips. So you have to be cautious of that. as as well as like MLGO, where you need to kind of find out, okay, where are they basing this thing, and you'll see it's right around 380s, right? So same concept as TANH, same concept ACXP, same concept EDSA, same concept MNTS. However, instead of peaking out, right, it pops right back through that 380 level and heads higher. So at this point, use your imagination over 440s, 450s. Hopefully, we have the same concept that we just went over that we saw on EDSA, which, as you guys know, went into a circuit halt right over here. ACXP, same deal. So again, it's going to be your job. It's just searching for liquidity pockets. So there's a particular liquidity level where there is, a trap formed, and then there's literally, no inventory. It's just super, super thin until it gets to the next point of liquidity. And then that's when you see the shift. That's the idea of the stuff, the exhaustion move. And as it pulls back, if it rejects the next time it goes, then you start to have a clean trade. Problem is, most people try to anticipate, jump in front. Yeah, you're going to be right most of the time, but do you make it through the circuit to circuit to circuit? Or what happens if it does do another circuit? Are you prepared for that? So again, hopefully this all makes sense. If you guys have questions, feel free to post them in the comments section. But we basically talked about this last week, and then you saw it kind of come into play this week. So kind of seeing how that progression happens is half the battle, and understanding where you're at in the cycle is most important. So again, that's that. And this week I really focused on protecting my average. I talked about, one of the things where, I did a lot in 2020 and 21, which then started to kind of cost me or minimize my trades in the last year. And so that's really just about focusing on the best entry and maybe one other scale, but rather than just trying to put on as much size as I can in particular situations. And that's been really the goal recently. We've been talking about it for a couple weeks, a couple months anyway, and it continues to be really the difference and super helpful with the way in which I've been trading. All right, so that's that for the first part, and then we are going to get into a video for the week ahead. It's windy here. Probably one of the last times I can do this outside before I end up freezing, but we'll see. But as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. First up for the week ahead, BBTH, very, very clean move, very nice opportunity, just a sign of the times, understanding what part of the cycle you're in. What I would do is go back and look at OPGN. I'd look at how that traded. I'd look at how VS traded, and just kind of get an idea of, yeah, there's a great opportunity where you can react to the trade and then it flushes. And if it doesn't stay heavy, right now we're in a market where things are going to kind of churn, and then it's either going to make or break. And if it starts to make, then if it swipes into a circuit, you're too late, right? So you have to be proactive, locking in if you're trading it off the open, and then you look for the bigger picture opportunities. So you saw that on OPGN right over here. You had one really great opportunity right off the open, and then another one. But if you stuck around and we're trying to, all right, this doesn't make sense, it should go back to 50 cents, guess what? You probably got squeezed out right here. And so this ended up giving another opportunity, which I took part in, to resize in on the short side. Now, I only made it to about right here, right in the 90-cent range, but still great opportunity, or I think it was 88 cents or so. But that would be taken away from me if I was too aggressive too soon. Same thing with TPST, where if you ignore all this price action, if it does eventually break through, guess what? You don't really have a choice, and it just ramps 50% in your face, and there's nothing you can do. If you're oversized, then you end up stopping out. So just be aware in this market if you were expecting something to fade and it doesn't. BPTH, like I said, higher the better, failed follow through. MLGO, we talked about. Again, for me, it's 370s, 380s needs to peak out. Otherwise, look for EDSA, TANH, MNTS, ACXP. review those trades. That's exactly what I'd want to see. We've seen it before. It had, I don't know, 70, 80 million, looks about 70 million shares that day, the last time that it ran. So in my eyes, this is just all about, all these China names and all these small caps are just trading vehicles. They're not companies. You can't think of them as companies. They are just there to try to create, lay a trap, and then exhaust everybody out. And that is the new modern day promotion. You used to pay $100,000, $200,000 to get some promotion and action like that to get it pumped. But nowadays you just trap shorts and you get a free promotion. Then we got EH. EH was phenomenal. I wish that it was maybe during market hours. I wish there was a lot more volume. But as you saw, I put some on at 37.80s. Then I had a little bit more in I think it was 34 range or so. I made it most of the way down to about 20, 27, 26. And then I rescaled in off the open and faded it all the way down to 19 or 20s. My internal goal was like 17 to 19s. If 19 stayed heavy, I did think that it might flush under those 17s red. But I tried my best and got a good piece of that on Friday, as most of you guys probably saw. So again, that was a good opportunity. Highly risky on the first entry. So with that was a lot less size than, I would typically trade if it was just a regular market hours. But otherwise pretty good opportunities once the market opened. Then we've got failed follow through momentum section, which is OPGN, same as usual, just some sort of morning shove. My thought is it probably gaps down, which does not take it off my radar. It used to back in the day, but just because something gaps down does not mean, you need to take it off radar. Still has another probably 10 or 20 cents in the short term, and then it'll just slowly kind of fade off. I would compare it to something like TTOO, which just did the reverse split. So probably, well, you can't really see it, but you can see it if I do this. Right over here where it just has 900 lives, right? And same thing with NVOS, where it just has so many lives just because the price range, you're fighting with people that have the same AMC mentality. You're never going to shake them out of their position. So they always hang on a little bit longer than you think. And I think you need to go in with that mentality on something like OPGN, VS even, and all these recent ones. And the reason behind that is because people were just rewarded on a 20-cent stock, 30-cent stock, 40-cent stock, and they all ran 1,000, 2,000%. So you're not going to convince these shareholders that they should sell, that it's junk, because they just saw stocks go 1,000, 2,000%. So they're, in their mind, they're sitting on the next one. So you're not going to convince them to sell. And because of that, when they do go flatline, there's a better chance they're going to rush up faster than they're going to fade. And you have to understand that when you're trading these types of names. LFMD, nice blow-off move. I'm watching it. Be cautious of this. So you can see here, we had a blow-off move, and then it sits back. The next day, it flushes, and it comes right back, right? So that voids it. When you have a stuffed move, slams, and then you get that dip and rip, that voids the trade. So again, we have a nice stuff move and just full retrace on Friday. So in any morning shove that kind of fails, I'm interested, and then we potentially may have that backside trade. We'll see. AMC, fantastic opportunity. Hi, Aiden. My scan. Can you close that? Aiden, special appearance. Anyway, AMC, we were prepared for this. Just let it go, let it go, let it go, let it go. And every single day it would flush and then ramp back up, flush and then ramp back up. And, it probably tired out a lot of shorts. But what did we know? We knew we had the catalyst into the Taylor Swift thing, which was Thursday at midnight. That's the catalyst. That's why everybody's buying it. And then I think they did $2 million or something like that, or just shy of 3 million, which I don't think that's good. But anyway, it's running up into that catalyst, and then it unwound. So keep an eye for it to continue to fade. But this has always been one of those trades that trades into catalyst, and then it just unwinds like crazy. So just be aware of that. But really, really nice opportunity. Saw the entry on Friday, and that worked out exceptionally Well, same deal. Tup. I missed this one, but squeezed enough people out. Now I'm going to be watching every push that fails for potential unwind. Next up, continuation side of things, PRZO. We already went over this, so I don't need to beat a dead horse there. But ideally, dips along a trend. If you're buying a breakout, look, it might work, especially if it starts to ramp 350s, 4s, and goes crazy. But I think what's going to happen is more often than not, you're going to second guess yourself because you're going to buy, it's going to flush 20 cents, right? I'd rather be thinking about where I want to risk towards and then dips that, get soaked up from there. HUBC and MOB, we already went over as well. And basically that anchored kind of concept where they're just pulling everything with it. So if PRZO continues to go, then HUBC and MOB should be watched. Because once again, it is that sector and theme trades. And as you guys know, sectors and themes last longer than you think. It's not like a small cap where they're just, pop and drop to raise some money, or just a PR at 8 a.m. and then a raise at 4 p.m. These are actually sector trades, which what we talked about last week is that these moves need to be digested, right? And as long as they're digested, the overall bull thesis remains. And here we are on this PRZO, and I still do believe that we are in a situation on this one, which again, I don't think that it needs to go straight up, but keep in mind that in like Wednesday and Thursday again, if it's consolidating and it hasn't pulled back, there is a good chance that there's going to be another failure to deliver, and there is a good chance that the liquidity will not be the same as what it was, and therefore we're going to have much bigger candles as you saw on Friday. So hopefully that all makes sense. And as always, if you have questions, leave it in the comments section. Please leave your key takeaway. See a lot of guys leaving some great stuff on Twitter as well, just with the notes, the little bullet points, and absolutely love seeing that because it allows me to kind of learn what you guys take away as key concepts, which I can then focus on it on the week ahead. So anyway, next week I might even dig in a little bit of the tech side of IU, just because I just feel like people just always think it's just a chat room, but that we're way beyond that. We're way beyond. We have so much tech, scanners, tools, and built-in custom news, and Max is even working on the AI news, which was fantastic for VS. For those of you guys that were in the room, you saw how fast that one came down. So it's just getting better and better, and I hope you guys are enjoying it. But I know that most people probably haven't even ventured out to see the tools. But the good part is I feel like, as a trader, you need 20 different subscriptions, right, for tools and different things that you use. But as you've seen, a lot of those tools are actually within IU now. So anyway, catch you guys in the room on Monday. Have a good rest of your weekend, and that's that.